Hi all, welcome to this new episode of my podcast, A Digital Tomorrow. Today I'm joined by Livio Stracca. Livio is the Deputy Director General, International and European Relations at the European Central Bank, ECB, and also Professor at the University of Frankfurt. Welcome, Livio, to my show.
Thanks, Ariel. Thanks for the invite. Very appreciated.
Well, it's actually my pleasure and my honor to host you today. Today we're going to talk about central bank related matters one more time. Those of you who know me know that I'm particularly fascinated for the topic of central banks and CBDCs, and in general anything related to central banking. So that's why it's always a huge pleasure to welcome someone from a central bank, and especially you, Livio, given your background and current role and everything that you've done both at the ECB and in academia. So without further ado, I would like to start by talking a bit about the European Central Bank before moving forward to the more specific topics. So if you could please let our listeners know a bit more about the European Central Bank. I mean, I know that most people will know already about it, but just in case, like for example, when it was created, what are its main goals, and anything else that you want to share with us?
Yeah, no, thanks. So the ECB was created in June 1998, so a little bit more than 20 years ago. And it's a central bank of the Euro area. So it's a central bank of the 19 countries who share a single currency, the Euro. In some ways, it's a normal central bank, but in other ways, I would say it's more than that, because it's also a European institution at the forefront of European integration. I think it's the only important central bank that is also the central bank of multiple sovereigns. So it does not interact only with one sovereign, but with many sovereigns. And this creates issues on its own. So I always say that ECB is a double challenge of being in ECB. You have to be a central banker, but you also have to be a little bit aware of political and institutional factors. So there is also a network. It's also the ECB as a head of a system where each country has its own central bank. So, for example, Spain has a Banco de España, Italy has a Banca d'Italia, and so forth. But they all sort of cooperate, to achieve, the monetary policy and other objectives. So, two other peculiarities of the ECB, maybe briefly. So, one is that it has a single objective of price stability. So this is different from the Fed, which has a dual mandate. The ECB has only one objective. Well, it also, to be precise, it also has some secondary objectives, but these are subordinate to the primary objective of price stability. And the second, probably the second dimension now, since 2014, is also responsible for banking supervision. And the Euro area is the biggest banking system in the world, with assets, I think, around 30 trillion euros. So the ECB is also the biggest banking supervisor in the world as well. So a lot of things to do.
Indeed. Well, thank you very much for sharing this. And I can imagine it must be challenging indeed for the European Central Bank, because as you said before, it involves like many different sovereign countries, not just one country. So I guess in that sense, it must be much more complicated than in other cases.
I think so, yes.
And before proceeding, I also wanted to mention what you told me before, that you are speaking right now on your own capacity, but you're not, your views, your thoughts are not those necessarily of the European Central Bank. No, I think you wanted to make this disclaimer before.
No, thanks for clarifying this. Indeed, speaking of personal capacity, and it's important to keep in mind.
And well, now I think we can talk about central bank digital currencies and digital euro. As some of my listeners know, I've done extensive work and research on CBDCs. I've published papers on this topic. I'm teaching the courses on CBDCs at CFT in London. I co-lead the CBDC working group at the Global Impact FinTech Forum. So it's a topic that I find particularly interesting. So given that the European Central Bank is quite active lately on this CBDC area as well, could you please share with my listeners What is the current status of the digital euro?
Yeah. Okay. So the digital euro is a project which was launched in July 2021. So a little bit less than a year ago. And so we are now in the first phase of this project, which is called the investigation phase, which lasts 2 years. So we have a little more than a year to go. And this investigation phase is basically, as the name says, is to investigate possible options, including the desirability or not on having a digital euro. So in a sense, no final decision has been taken. So at the end of the investigation phase, the governing council, which is the ECB decision-making body, will have to take a final decision whether to launch, the project for digital euro. So this is a multi-year project, and I personally believe that we will have a digital euro, but it's still not set in stone. So it's still under investigation. So this is where we are now, and right now, at this particular point, this 2-year period, we are mostly looking at use cases. So what, because you can think of a CBDC, better than me, having multiple objectives. It can be used for retail versus wholesale. It can be used for paying, person to person or machine to machine, or many different environments. So we need to narrow down the options to those that are most promising, more important, at least in the beginning of in the first release of the euro. But later you can have other features, but the beginning, we are kind of zooming in on what we want to have in the first release. And there are also focus groups, so groups of citizens who are asked about what they would need or desire from digital euro. And actually many so we discovered many don't have a clear idea of what the digital euro is, which is understandable, of course. So they a normal citizen doesn't know the difference between a CBDC or a bank deposit, or so there's also a bit of an education. So this is where we are at this point in time, I would say.
And if eventually a decision is made to finally launch the digital euro, when do you think that launch would take place? Like, do you think it would take like 2 years from now, 4 or 5? Do you have any rough idea about the timing?
Yeah, so it's undecided, but as I said, it's going to be multi-year. So if you want a number, I would say 4 or 5 years, as you said, but it's also a little bit uncertain. But if I have to put my bet on it, I would say around 5 years. And what is also important, I mean, there are some actors in Europe who would like to have a faster deployment or faster introduction, but we need to keep in mind that also, look at other countries who are investigating or even launching a digital currency. All of them are taking many years to do that. I mean, you look at Sweden. Also, if you look at China,
yes,
the Chinese CBDC has been in the making for several years. It still is being introduced in a very cautious way. So it's not something that can be done overnight. It could be a fundamental change also in the monetary system. Domestic, international. So, and the euro, also to keep in mind, is a major currency in the world. So perhaps this also gives a bit of an extra caution in doing things right. Yeah.
I fully concur with you. Launching a CBDC cannot be done overnight because it affects like the very core of a country's monetary system, not the whole financial system, monetary policy, etc. So this is why it takes years. You mentioned, for example, China. China started to do research on the yuan, on the digital yuan, in 2014, and they didn't even start to actually test it until May 2020. So we're talking about a 6-year research period plus a 2-year testing period before they actually launch it recently. So that's why, in Europe, you can do it faster, but of course it cannot be done overnight in any case.
Yeah. At least smaller jurisdictions can do it quicker. You have countries, I don't know, the Bahamas, or somebody's doing quicker, but it's always small countries. I mean, the major economies, they need more time to
yes, but
do things right.
Of course, but in that case, the amount of people and money involved is much lower. So I guess that's why it makes things kind of easier. But when we talk, for example, about the European Central Bank and the Eurozone, well, it's a different case.
Yeah.
And I know that we are still in this investigation phase. So everything I'm going to ask you, it's not like set in stone yet, but still, to you, what would be like the main advantages for the Eurozone to have the digital euro in the future, if that is the case?
Well, I mean, I guess is what what we hope to achieve is really, in a sense, is to maintain the central bank money as a basis for the monetary order, for the monetary system. So it's we have been noticing an increase in the digital payments and a fall in cash. I mean, the fall in cash is less pronounced in Europe than elsewhere. There are still some pockets of society who actually still use and value physical cash, but certainly there are other parts, I mean, the younger people, or even some countries like the Nordic countries in Europe, who are very advanced in this transition. And basically, the idea is to preserve central bank money at the center of the system, even when physical cash is less and less used. So this is, I guess, is one dimension. The other dimension is also to provide a public alternative to possibly new monetary assets that are offered by big tech, and there are concerns on competition, antitrust, and also data privacy concerning big techs. And so the idea is that the consumers, the citizens, should have an alternative, at least to those, in a world in which these big techs dominate also payments. So this is a little bit the idea. So keep central bank money at the center of the system, and also offer citizens an alternative to perhaps some oligopolistic or monopolistic offer by some big tech. That would be probably the, and these big tech are also, there's also an additional dimension maybe, is that this big tech is probably also not based in the euro area, because we know that the key players are outside Europe. So there is also this element of autonomy that perhaps is less important for DCB, but is very important for some European policymakers. So the European policymakers often actually express their support to the digital euro, mainly or also for this from this dimension of strategic autonomy and being independent of players that are headquartered outside Europe. Mm-hmm. So there is a bunch of elements, but I would say the fundamental one is that citizens should be able to pay with central bank money in the future.
Mm-hmm. And you mentioned now the idea of privacy. When it comes to CBDCs, what are the main risks or challenges that you foresee? I know that one of them is privacy, because, well, I mean, whomever you talk to, they always mention privacy as one of their main concerns, even though it doesn't need to be like that necessarily, because I know that CBDCs can ensure privacy. But is privacy one of the biggest concerns that you foresee? Is there anything else as well?
So certainly I agree with you that privacy is paramount. And I think in Europe we are particularly attentive to privacy, compared with other countries. Sure. I mean, we did a public consultation before the decision to launch investigation phase, and which was an online consultation, and respondents actually mentioned privacy as a concern number one. Now, this is partly related to the fact that we got most answers from Germany. So actually, most respondents were German men. So there was also a gender bias in the responses. It's just the people who actually respond to the consultation. Mm-hmm. And in Germany, privacy has always been very important, considered very important, also in the media and so forth. So I think in Europe, more than in other parts of the world, privacy is going to be paramount. I mean, at the same time, I think it's going to be difficult to ensure that the digital euro will have the same degree of privacy as physical cash. I think, in particular, I don't think an anonymity will be possible. So full anonymity will not be possible. And so this is also one of the possible criticisms of a CBDC. I think it's impossible to have the same feature of anonymity as physical cash, which also implies not being overseen by state entities or big tech and so forth. So, but I think what is considered is also to have a system where maybe offline payments or small payments, at least very small data requirements. So maybe to subject large payments to more checks, also for money laundering or other issues, but to exempt in some way small and offline payments. So this is something that is being also investigated, and this in particular for the person-to-person payments. So this is, but generally this is one of, I would say, top 2 or 3 concerns.
I mean, I agree, but the thing is, unless you're paying with cash, there is no full anonymity, no? I mean, no matter what kind of payment method you use, even for people using privately issued cryptocurrencies, no, there is always some degree, like larger or less large, but there is always some degree of well, control or lack of anonymity, and it makes sense. I mean, the only way to avoid that is by just using cash, no? So I think, I mean, personally, I don't think well, privacy should be such a big concern, especially in Europe, no, where we all know that the European Central Bank is taking this deeply into consideration. So I don't think there's going to be any problem in that sense.
I mean, one aspect that I also wanted to mention is that I mean, I think it's likely that that the digital euro will be distributed by financial intermediaries. So in the end, they won't be like an account at the central bank necessarily, or at least the central bank will not interact with citizens directly. So I mean, we are already used to banks to interface with banks, you know, using bank deposits for payments and so on. So I would expect an experience relatively similar to that, and that we have to say the banks. I mean, you can criticize banks on many things, but at least on privacy and data protection, they've been quite good. So in that sense, I think this. I mean, so if as I would expect, the digital euro is eventually distributed by banks or other financial intermediaries, I would expect that these intermediaries take these aspects very much into consideration. So, yeah.
And how can it be ensured that the digital euro doesn't jeopardize financial stability or undermine the effectiveness of monetary policy implementation? How can we make sure of that?
Yeah, this is perhaps probably the most difficult part. I think we say internally that that what we need to achieve is a kind of a sweet spot, because we want there to be some demand for digital euro, because otherwise why introduce a digital euro? So there is no demand for it, but not too much demand. No, we don't want to destabilize the system. So this is not easy to reach the sweet spot of a bit, but not too much. And I mean, the parameters on which to act to achieve that are first remuneration. So you have to make sure that the remuneration is not too competitive. For example, in a world with negative nominal interest rates, you know, ensuring that the CBDC has a zero remuneration means that it's above market. So the remuneration is above market, and this is an incentive to hoard. So to use the CBDC as an investment vehicle and not as a payment. So this is one aspect. So act on the remuneration. Second is to ensure limits to holdings. I mean, limits has a host of practical aspects or difficulties with it. But I mean, I think the broad idea is that this is a payment instrument. So it's similar to the role of cash. You know, it should not be a hoarding or an investment instrument. I mean, we know that some households also use cash as investment. I mean, this is a traditional person with cash in the mattress or things like that. But actually, it's a phenomenon that actually exists. So some people do use cash as an investment, but this is a minor part. I would say it's a small. So you think of digital euro not as something that goes in the several trillions that really changes the composition of the financial system, but more something like cash that plays a significant role in payments, but overall in terms of quantities, in terms of asset liability, is not a major component of the financial system. So So reaching the sweet spot is really what is important. Now, another thing I want to emphasize is normal versus crisis times. You may have a situation where, okay, the digital euro is not particularly in demand in normal times, but then you have a crisis, and you also have to make sure that there are systems to prevent a run towards the digital currency. For example, imagine that at the peak of the Greek crisis, so you remember there was a banking crisis in Greece in 2015. So imagine that in that context, where Greek citizens could easily transfer their bank deposit into digital euro. Of course, you would have to have an immediate, using their phones, you would have to an immediate huge run. So there must be kind of safeguards that this kind of phenomenon does not happen, because a digital run, of course, could be much quicker. At least in the physical run, you have to go to the bank and run to the bank. In the digital run, with your mobile, can go super quickly. So this kind of aspect you have to think in normal times, but also in crisis times, and both dimensions need to be ensured. But the general principle remains the one I said before, of having the sweet spot of a bit of demand but not too much demand.
No, I mean, you're right. Everything needs to be thought and approached very carefully. You mentioned now this example about a digital run, and it is true that compared to physical ones, within just a few minutes you may be having this huge mess. So it's important to think everything like very thoroughly. And one more area that I find very interesting about CBDCs is when it comes to their interoperability, their cross-border aspect. Back in 2020, you co-authored an article called The International Dimension of a Central Bank Digital Currency alongside Massimo Ferrari and Arnaud Mel, and were published in Vox EU. And basically, I wanted to ask you what the main findings of that article were.
No, thanks. So this article is a theoretical model, basically, and it basically asks the question, okay, suppose that you have two economies, think of Europe and the US, for example. I suppose that one of the two is the first to issue central bank digital currency, and because digital currency is easy to use and liquid and so forth, it starts to get used in the other country. So suppose the ECB introduces digital euro, and the US citizens start to use digital euro in their payments. And so what happens in this case, and basically what we find is, the effect, as you would expect, is similar to a dollarization. So meaning that if you have a dollarized country, means that if you use a foreign currency, you lose monetary policy autonomy. So your monetary policy becomes ineffective, because basically it's a foreign currency that is used in your country. And you have this kind of course, if the foreign CBDC is used in a certain economy, you lose monetary policy independence. So the foreign currency is used. But there is an addition. So the main finding of the paper is that this is especially so with the CBDC, because the CBDC is easily scalable. So there are no, for example, unlike cash, there are no storage costs. So piling up, for example, dollar banknotes abroad is costly, while in principle you don't have this cost for a CBDC. So you can easily, it's a similar, in a sense, a similar reason that we just did for the case of the Greek crisis. So it's easy to pile up foreign CBDC, it's scalable. And so this kind of dollarization aspect as a kind of additional channel so it's a kind of super powered or enhanced dollarization. So the other country loses monetary policy autonomy, and the domestic economy, which issues the CBDC, actually exports its shocks abroad. So it's basically monetary policy changes in a domestic economy are transmitted abroad, precisely because foreign citizens use your domestic CBDC. So you issue CBDC, you export your monetary policy abroad. So that's more or less the sense of the paper.
Well, thank you for sharing. And now, before finishing this part on CBDCs, I wanted to ask you as well about cryptocurrencies. As I always say when I'm teaching CBDCs, CBDCs are not cryptocurrencies because of many reasons. One of them being, of course, the most basic one, which is the fact that a CBDC is issued by a central bank, it's legal bank money, whereas a cryptocurrency is obviously not issued by a central bank. It's maybe like the most decentralized instrument that you can find. It's a flagship of the DeFi, decentralized finance movement. So bearing that in mind, could you please tell our listeners what is well, the European Central Bank's view on cryptocurrencies?
So I don't think there is an official view, but well, first of all, in terms of definition, I would say cryptocurrency for me, at least, is something that is used for payments that basically has no issuer. There is nobody has a liability for it. So in this sense, I would probably see stable coins a bit of as a different category. So I personally would not put stable coins necessarily among cryptocurrency, but this is a question, I mean, it's a semantic question, of course. So I'd say DCB probably views cryptocurrencies with I would say a mix of caution and worry. The worry is mainly related to possibly illegal uses. So I think there is always the call, which not only DCB but many other authorities or regulators have to have a proper regulation of these cryptocurrencies, ensure that they are not used for illicit purposes. So that's probably a main concern. For example, there's a suspicion now that they're used by Russian citizens to circumvent the sanctions of Russia. So there is some evidence for that. So this is an example. I mean, to prevent illicit uses and having a proper regulation at the global level is probably one of the most important. I personally, one dimension of cryptocurrency that I personally don't find particularly disturbing, but many people do, but I don't, is the fact that they have no intrinsic value. Mm-hmm. Because you can say the same of fiat money. I mean, value is always depends on what other people believe or society, on laws. Yeah. So the fact that they are not, intrinsically valued, for me, is by itself is not a killer argument. But here I'm expressing my personal opinion. I don't think DCB has a view on that, but yeah, this particular dimension I don't find particularly unique to cryptocurrencies. All kind of non-commodity based monies share this characteristic. I think the concern is more about kind of illegal uses, and there is also a consumer protection aspect a bit. So make sure that those who hold these cryptocurrencies, whose price is very volatile, understand the risk they are taking. And this is obviously true for consumers, but for us, because we care about financial stability, it's also about holding by banks or non-bank intermediaries. I mean, so they should really understand what risk they are running. And we all know that, I don't know, the price of Bitcoin is several times more volatile than the stock market, several times more volatile than any emerging market currency. I always tell my students, I always show my students a chart of the Bitcoin price vis-a-vis the stock market, and you have to put them in different scales to evaluate. So that's of course always to keep in mind. Yeah.
Yes, I guess that volatility is what makes cryptocurrencies so attractive and at the same time
sure.
dangerous, no? Because I mean, you may of course make a lot of money in a short period of time, but you may as well lose it, no? So that's why, as I always say, it's a market that you need to study thoroughly before like digging deeper into it. No, I mean, no one can.
They also, yeah.
No, please.
And also now there is also evidence that is also more correlated than before with the rest of the market. Because I mean, before an argument was that at least these are okay. They may be more volatile. They're really volatile, but they are not very correlated with the rest of the market. And so it's a bit of a hedge, or it belongs to a portfolio because basically the covariance with other assets is low. But now I think there is evidence. I think the IMF has published a blog recently on that actually the correlation has gone up. So if there is a rise in risk aversion, for example, so both equities and Bitcoin go down together. So even from that sense, you have to be careful because the covariance may be time varying and maybe it has gone up.
Mm-hmm. Yeah. Yes, that's true. I mean, it's becoming much more institutional, the crypto market, compared to 2-3 years ago. So I guess that, I mean, it's a huge change compared to a few years ago, indeed.
Yeah.
And well, now before wrapping this up, I would like to talk for a few minutes with you about a part which I titled The Economics of Central Banking. So we are going to talk a bit for a few minutes about the economics of central banking, but not about CBDCs. And I guess I should start by asking you that, well, given these current turbulent times with so many things happening and going on, like in Europe and elsewhere, what are the current financial prospects of the European Union?
I mean, the euro area was basically coming out of the pandemic period, and it was recovering quite strongly until basically the latest tensions related to the Russia-Ukraine war. So these tensions, this war entails probably a correction. So it entails that we will have lower growth, and also at the same time higher inflation. I mean, inflation was already high before the war, mainly due to energy prices. So basically, in the exit from the pandemic, we had seen very strong rises in oil, and in Europe also gas prices for a number of reasons. So we were already dealing with high inflation before the war, but now the war has even exaggerated this trend. So we'll have higher inflation for a longer period. But overall, we don't expect the recovery to be completely derailed. So there will be some recovery, we expect. And inflation is also, although elevated, it should come down again in the foreseeable future. So in a sense, we don't expect lasting damage from this. I mean, if the war remains contained, of course, and at least we don't know.
Fingers crossed.
Fingers crossed.
Yeah, let's see. And then, well, before finishing. You published in 2018 a book called The Economics of Central Banking, precisely, which is a book that, if I'm not mistaken, it was pitched at the general public, so that's why you used a much more plain and entertaining language. I mean, it was not so academic compared to others, but you wanted to teach people, the general public about these topics and these ideas. So I wanted to ask you a bit, if you could please share with my listeners, what was this book about, and what are the main conclusions or ideas that you reached?
So thanks. So this book was basically was built on my university lectures, but I wanted to. I mean, I had a book proposal, and I in the end, together with the editor, I decided to make it a bit more like for the general public. And the idea is that we know from surveys and so on that citizens know very little about central banking, and it's quite astonishing if you ask people. Which is understandable, of course. They don't need to know. It's also there are many more entertaining topics to think about, but still, we believe that is not also in terms of legitimacy for central banks or trust in central banks. I think it's not desirable that people really don't know so little. And so the idea was a bit to explain to the general public in plain English, what central bank is about. Now, some readers have told me actually it's not that simple. So it looks simple to me, but some people say, okay, it's still not super easy to digest. So I'm thinking of making an even simpler version of the book.
Okay.
But nevertheless, this is the intention, and I believe in general that economics, finance is something that should be made more available at a more popular level to the general public. I mean, we have seen in other fields, psychology, medicine, that there are many more books or publications aimed to the general public. Philosophy, also cosmology or physics is full of books that are pitched the general public. I think economics and finance, for some reason, is still not so widespread. So I think we need more. I mean, I'm self-advertisement a bit, but I think we do need more books with that characteristic, because there are also some interesting aspects and also entertaining aspects about it. And also aspects that people don't think about. I mean, the zero lower bound on interest rates, for example, I'm always surprised at how few people know and understand it. And also among my students, when I was teaching central banking, I always ask my students if they know what the zero lower bound is and what causes it. And even among macro students at the postgraduate, so the master level, I would say a large majority did not know. So even aspects that we take for granted, among us economists, they are completely unknown to general public. That's why one of the chapters of the book is about that. It's about the zero-word bound, what causes it, what consequences it has, and so forth.
Mm-hmm. No, that's actually a good example, because when I teach about CBDCs, I mention that as well when I talk about how CBDCs may affect monetary policy, interest rates, and I mention this topic, this idea. And I was surprised as well to see that, I mean, many people know about it, of course, many people of my audience, but many people do not. And sometimes we're talking about people who, as you said, know about macro and all that stuff. So I was surprised as well to see that.
Yeah, thanks for confirming.
Indeed. No, but I think it's important to educate the general public in finance, because, as you said, it's kind of easy to see many many works on psychology or philosophy, in these kind of areas, trying to teach as many people as possible in a plain language, whereas when it comes to finance, it's kind of more complicated. And I think by teaching people more about central banks, traditional finance, decentralized finance as well, we would be maybe avoiding many issues. You said before, for example, that cryptocurrencies are volatile, which is true, but I think as well that if we educated people more on what are the risks of not just investing in cryptos, but even the traditional stock exchanges, we would be avoiding many issues, many mistakes that people make sometimes because of lack of deeper knowledge.
Also, we would also prevent some income inequality and wealth inequality, because we know, for example, that the rich invest more in risky assets, they become richer. And partly is an educational problem. I think many people don't know, or they are scared about risks, and they don't understand how to manage risks. So there's also this dimension that this lack of knowledge also creates inequality over time.
I fully agree with you. Well, thank you very much, Livio, for your time today. It's been a pleasure. We need to wrap this interesting discussion up for today, but still, I think it's been great to talk to you about the European Central Bank, what it is, CBDCs, the digital euro, the financial prospects of the European Union. I mean, so many interesting topics that we tried to squeeze in shortly more than half an hour. So thank you very much for that and for accepting my invitation. It's been an absolute pleasure.
Thanks, Oriol, and thanks for inviting me to this podcast, which I really find interesting. And as I said before, I'll try to catch up on previous episodes, because I think you are really covering interesting material. So congratulations on that.
Well, thank you very much. I try to cover as many topics and areas as possible. It's not always possible, but I'm trying to do my best. And well, to all my listeners, thank you very much for your constant support, for listening to all my episodes, and please stay tuned for the next episodes of A Digital Tomorrow. Thank you very much, and goodbye.
Goodbye.